Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with John Rubino. We're going to be talking about another major deal within the resource sector, which also looks like it's helping out a couple other well-known exploration and mid-cap companies. Also talk about the gold price back over 2,500 and some of the other global news. You can follow John on his Substack account, which we will link to in the show notes. Now, John, the big deal that was announced this morning is Osisko being bought out by Gold Fields. It's a $1.6 billion, that's U.S. cash deal. Gold Fields is coming into this game, and they are paying, I believe, one net asset value for that asset. I think a lot of people know Osisko mining quite well because it's been around for quite a while. That project is very well defined with all the drilling that's been done there. And again, on the back of that, we're seeing some stocks without any news moving much higher today. Skeena Resources, Snowline. There's a handful of stocks that are up close to double digits, again, without any news. So, John, your takeaway from this Osisko mining deal. Osisko mining finally coming off the table.
Hey, Corey. Hey, Shad. Yeah, this is a good day for us to talk because we've been watching these little explorers for such a long time. And it's really fun to see them pop in response to some non-drill result news. Because what really needs to happen for the explorers right now is it's been such a hard time to raise money. And that's really weighing on them because you look at somebody generating great drill results, but then it's normal now to think, okay, but they're still going to have to raise like $30 million more in order to get the next 6 months drilling done or the next year's drilling done. And so you focus more on that and the dilutive impact of that than on what it means that they're going to discover a lot more gold and silver in the course of that drilling. So you let a couple of big takeovers happen, like the Osisko one, and then that changes the market's mindset because people start looking around going, okay, well, if this is possible, who's next? Who's got the drill results that might attract Agnico Eagle to come in and do that kind of a takeout? And there are a lot of explorers out there right now who have, in almost media silence, been generating some really good drill results and are of a profile now that might be interesting to big miners. Osisko doesn't really move the needle in a big way for Gold Fields, but as they say in the press release, it's a nice bolt-on addition. Some really clean new addition to their portfolio, and so there's a lot of explorers that are out there like that, and there are a handful that make a meaningful difference even to a major if they buy them. So here's hoping for a lot more Great Bear resources out there in the not too distant future as people start looking around and finding out that, Snowline is really big now, and so's Newfound Gold and Skeena, like you said. So it's possible that this deal won't do it in and of itself, but give us a couple more deals of the same profile, and all of a sudden you've got a buying panic in this space, or at least a financing panic. The banks will be calling up these little explorers and saying, hey, do you need another 10 million? It'll be a lot different from what it is now, where I think they're basically begging for financing, and pretty soon it'll just be handed to them. And that'll change the tenor of this market dramatically.
Well, and John, another thing we were discussing off mic before the call is that the premium on this is 55%. We haven't seen one of those in a while. Usually the takeovers that we've been seeing were 20, 30, 40%, which wasn't getting investors in those stocks as excited as something like this, where it's pushing 60% premium, stock up 60% today. And so it also makes you look at what are the ounces in the ground for Osisko mining being valued at. And they were really a developer more so than an explorer at this point. They'd already put out resources and economic studies and had to really de-risk their project with metallurgical work and engineering. And Skeena's in that same boat. They've put out all kinds of resources and updates on their economics and given the market an indication of where they could be valued at on the project level. Now this closes the gap. So couldn't a sweet spot be more advanced companies that have all those economic studies out now getting the re-rating using Osisko as a benchmark?
Oh, yeah, because we're not in the buying panic stage of this process at all. The potential acquirers are still wanting to de-risk whatever it is they buy, and they want to see very clear indications, unambiguous indications that the resource is absolutely there. It can absolutely be mined profitably. They want to know all those things. So that means that the advanced explorers slash early developers are probably in the sweet spot, like you said. But let a few of them be taken out, and then everybody starts becoming a lot more forgiving about what they're buying. So that, at least that's how it normally goes. You end up with some really aggressive deals being done just because no one wants to be left out. We're in the very early stages of that cycle. But you look at where gold is, and you look at it, this is the summer doldrums right now for gold. And it's actually up a little bit in the last 6 months. It's hovering near its all-time high, and we're heading into the seasonally strong time for gold and silver. And there's a huge number of fundamental reasons out there for it to be this high or higher. So it's possible that you end up with a really nice kind of perfect storm in this space where the underlying metal, or metals in this case, because I think silver should outperform gold going forward, but the underlying metals are high and getting higher, and the M&A activity is robust. And that's the kind of space where you get the big guys generating a lot of free cash flow, which eventually always burns a hole in their pocket, right, in every cycle. And they start thinking, wow, I can raise the dividend, I can buy back some of our stock, but our stock isn't exactly cheap right now because it's been up since gold has been going up. So maybe we better look at the whole reserve question, and maybe we better do it now before Newmont comes in and buys everything in sight. And so, that's the fun part of this cycle. And we're not there yet, but we're finally seeing some signs of something like that get started with this Goldfields Osisko deal. So again, nothing is guaranteed in this space, and all kinds of things could go wrong, especially geopolitically out there. But it's also possible that we're in that part of a cycle, which has recurred a bunch of times. In the last 20 or 30 years, we've seen this going back to the 1970s, we've seen it maybe 4 times where everybody gets excited and a lot of deals get done that maybe in retrospect shouldn't have been done at that price, but it was really nice for the owners of the acquired companies. So we could be heading in that direction. And we need a couple more deals before it makes sense to say we are in that process now, that stage of the process, but they could happen. So.
Yeah, as you said, John, this is still very much focused on some of the bigger companies and the more well-known projects, with the larger guys generating some good cash flow numbers quarter after quarter and looking to, I guess, acquire potentially some other assets. It does seem to make sense right now, though, to stick to some of the higher quality and larger companies, though, because some of these juniors, if they're not already running, doesn't seem like they're playing catch up. So how do you time that out?
It's a tough one because the M&A action is likely to be in the decent, well-established explorers / developers. Those are the ones that will probably get bought out first. But some of the explorers that have generated some good drill results and are looking at a reasonably trustworthy property now are so cheap, that they can double in a heartbeat for no apparent reason because they're thinly traded and they've been so beaten down. You look at I-80 Gold, for instance. They've just been crushed lately by the inability to finance themselves cheaply. But let that change. Let people start offering them money to start building out their facilities and actually start producing. Then everything could change for them. It could go from, it's like 88 cents a share, I think, US right now. And you could see $1.50 very easily without any actual stuff happening, just a financing change. Somebody comes in for a joint venture or something like that, or somebody else offers them a bank loan or something like that on very good terms. So, and then Snowline is another one. That one's not dirt cheap, but with its drill results, it could be bought out for a big premium right now. And, it's not by any means a developer yet. It's just an explorer. But so I don't know. I think it makes the most sense to look at the most advanced projects and assume they're going to be the ones that get bought out first. But it could be that they underperform a lot of the smaller, younger companies because the latter group are just so cheap right now that once they go from being not hated or from being hated to not hated, that's a double or a triple for a lot of them. So I don't know. I think the whole space does well, but personally, I would err on the side of caution, and buy the ones that are most likely to be taken over in the near term, while throwing a little bit of money, at the lottery ticket stocks, just because, they could do some amazing things in this kind of an environment.
Yeah, always nice to pepper in a few lottery tickets in the early stage companies, but they are probably not going to be takeover candidates, and it really depends on if they have the financing in place to do a work program this year. There are a lot of junior explorers that don't have any money still, and they don't have any work, and they won't have any news. So you really got to separate the quality from the companies that have failed to raise money and have some kind of a catalyst for this year. But let's also look at the producers, John, because Q2 had a lot higher gold price than Q1 and Q4 of last year. And there were some majors and some mid-tiers that put out some really good numbers. And we were mentioning also off Mike that Q3 is looking even better. So far, we're still only halfway into it, but it's looking like we're having even higher gold prices now. So when analysts start crunching the numbers and they start looking at the math, they're going to realize that some of these gold producers are making money, and there's still a lot of junior producers that could be acquired in addition to the developers.
Yeah, gold was up about 17% year over year in Q2, which, if you're producing the same number of ounces year over year, your revenues go up by 17%. And if you're controlling your costs, a lot of that revenue increase goes down to earnings and cash flow. And that happened with the well-run producers this time around. Agnico Eagle and Newmont and Barrick all had pretty good numbers in the second quarter. And as you said, they're probably going to have pretty good numbers in the third quarter too, because gold is up 7 or 8% sequentially now, right, today versus the average for Q2. So that's another nice pop in revenues and potentially another nice bigger percentage pop in cash flow. So 2 quarters in a row like that tend to make companies start showing up on momentum investor screens. So that could happen to the gold and silver miners this time around. And, if that's the case, then you got these mining CEOs, the big miners, with rising stock prices, rising cash flow, optimism everywhere they look. And what do you do in that kind of a situation? You reward your shareholders with a higher dividend and some stock buybacks. And then with what's left over, you go out and start increasing your empire. So 2 good quarters for the big miners ought to result in a stepped up M&A environment for this space. So we'll see. And this is nothing, not reaching at all in saying that. It's just what happens in every cycle for the gold and silver miners. There comes a time when things just seem so good that it's impossible not to build an empire. If you've got the cash to do it, and if you're running a well-run producer already, you do have that cash. So that's the kind of exciting stuff that happens late in the cycle for precious metals. And 2 good quarters in a row with strongly rising cash flow for a lot of these guys is a good start. A whole year of that would be better, but 2 quarters would certainly bring the big miners to a lot of people's attention.
John, is this the best opportunity you've ever seen in the gold stock? Simply when we look at something like GDX, it's trading at levels that we haven't seen since more around April 2022. That's when gold was at $2,000. We're seeing some of the lowest volumes on record, at least in the past more than a decade, for GDX. And that, again, gold is at 2,500 right now and continuing to trend higher. This disconnect is still here within the miners, even though the miners have done fairly well recently. But is this the best opportunity, or is there something bigger at play?
Well, there have been some great opportunities in this space. Like gold was $280 an ounce in 2000, and gold and silver just got crushed in 2008 when the banking system almost died, and then they got smacked down again with the pandemic when that hit. So there have been some big opportunities out there, but this is in that category. This is a hated sector, or at least an ignored sector. And relative to the kind of cash flow that, part of it is that mining is a harder business than it used to be right now. So nobody's generating the kind of cash flow they would have if conditions operationally were like they were in those previous times. But gold's price is not like it was in those previous times too. It's much higher. So I think this is a great opportunity. Maybe not the best ever from our point of view, but it's really, really good. And if we avoid World War III and we don't have some kind of a banking crisis in the near term, which, those things are kind of possible right now. But either of those things, well, not World War III, forget about, if we have World War III, forget it. Everything is off the table and there is no good answer to how to invest for that. But leaving that aside, you would expect the world's central banks to respond to any kind of a downturn right now with panic cuts, because they know how much debt's out there. And in a recession, they know how much bad debt is going to be out there. And they can't let that bad debt blow up. So they'll aggressively cut interest rates. And then we'll see everything take off again, like it tends to do in these cycles. So let the US go back to 0% interest rates, which could totally happen in the next recession. And all of a sudden, the carrying costs, on top of everything else, the carrying costs for gold and silver physical go down to zero or close to zero. So that's the kind of thing that could easily happen. And it makes this a great environment for people who are good at stock picking in this space. And, I haven't always been one of those people, but I'm learning to be able to separate the wheat from the chaff here. And so for somebody like, say, Rick Rule, this has got to be like an all-you-can-eat buffet right now. He's got to be looking around and just feasting on the really good deals out there. And we should be trying to do the same thing, I think.
Well, John, I want to run another idea by you. GDX has done well, but to Corey's point, it hasn't gotten up to the levels it was in prior cycles, even though the metals prices have. But a lot of people have pointed to silver kind of dragging butt a little bit here and not outperforming like we have seen in prior cycles. And that's got that speculative bit. That's got the energy in the sector. Same with the silver stocks, where when they really get moving and outperforming, that's when you see the real fireworks. So how are you looking at something like silver and the silver stocks now? Because it seems like gold is doing well for a safe haven bid and silver isn't participating as much. How are you reading it?
Well, I think people are a little bit worried about silver because it's an industrial metal. That's normally a great thing. If you just look at the supply-demand calculus now in silver, it's ridiculously undervalued based on the industrial uses for it that are evolving now. So that's a great story, but it's also a cyclical story. And if we're heading into a recession, which, there's 1,000 people online saying that we are, and I have tended to be one of them, and I still am one. I still think that there are a lot of reasons to worry about the economy right now, and that we probably have a slowdown, maybe a serious recession in the not too distant future. That hits silver a lot harder than it hits gold. So I think one reason silver isn't just taking off right now is that a lot of people are looking at it as an industrial metal that is risky in a recession. But let the recession hit, let everything go down, including gold and silver, and let the central banks of the world start reliquefying the system. And then silver, like you said, is just so tiny of a market and so illiquid that that's when it really outperforms gold. And that's, the later part of the cycle when gold is going up nicely and central banks are easy and everybody expects precious metals to rise. That's when silver goes up twice as fast as gold. So I think we'll still see that. It's just taking a lot longer this time around than it seems to have in the past. But I can remember waiting a long time in past cycles for silver to do anything worthwhile at all. And I actually had one friend way back when who just refused to talk about precious metals anymore at a certain point. He had a ton of silver. It was like $4 or $5 an ounce, and he just didn't want to hear about it anymore. But eventually that same pile of silver went to $18 or $20 an ounce in the next cycle, and then $50 an ounce at the peak of the next cycle. So same thing as what's coming. We've got something like that coming. It's just that there's a lot of worry still, and we have to get over that hump of worry, and then things really start running. And I think that recession that's looming out there is the big worry, because it's very possible that we have another 2008 or 2020 scenario where the economy rolls over, stocks tank, and that pulls precious metals down too. We've got to worry about that. But in both of the previous cases, most recently, they were V bottoms. So yes, it happened. But if you kept some powder dry and you were paying attention, you were looking at history, and you were analyzing the companies, the miners that were getting pulled down along with the underlying metals, and you knew they were still rock solid companies and you could buy quality at the bottom, you made a ton of money. So the worst case scenario, leaving out World War III, the worst case scenario in this space is another V bottom in the next recession. That is a phenomenal buying point. See, that's where I would probably say that's the best opportunity we've ever seen. If we get a V bottom from here in the precious metals miners, when they're already pretty undervalued, but they get smacked one more time because of a recession, then that might be the time to mortgage your house, sell your new car and drive an old beater for a couple of years, and then just put everything into the mining stocks at that bottom. We're not there yet, but that day is coming, and but we don't know for sure that day is definitely coming. So we should still be buying quality now. But I would say keep some powder dry, and if we get a repeat of 2008 or 2020, be ready to really jump in and learn the lesson of those previous V bottoms and ride this next one, up to 10 baggers with a lot of the companies that you could buy.
Oh, that can be the scariest time to buy, but also, hey, maybe don't put all of your money, all of your savings into miners broadly. That's maybe not the best diversification, but I do get what you're saying there, John. There can be an opportunity, but again, that's after a potential major crash in these markets, where we've seen a pullback 3 weeks, 4 weeks long now. Let's see if that continues. John, as always, thank you for your time. And again, everybody who wants to follow along with what John is writing on a very regular basis, click that link in the show notes to visit his Substack. John, thank you again for your time. Great chatting with you.
Thanks, guys. Talk to you soon.